Start with the market, specifically the Nasdaq S&P 500 coming off their best week since November, starting this week in the green as well. Joining us now is Emily Roland of Hancock Investment Management and Tim Urbanowicz of Innovator Capital Management. Good afternoon to you both. Emily, I'm going to start with you because we are in the thick of earnings season. We know that has been driving more of a risk on sentiment here in recent trading sessions. And oh, by the way, we're starting to see the pickup in deal making. Look no further than potential with Paramount as the latest example.
Yeah, absolutely. The story to us so far in earnings season has been the tech and communication services sectors really carrying the market here. Earnings up 30 to 40% on a year-over-year basis versus just about 2% for the S&P 500. Now, of course, the reaction to those earnings reports has been pretty mixed. A lot of the good news was already in the price, so we're seeing a variety of reactions. And in fact, the market's starting to reward those momentum stocks that have worked so well over the past 6 months after a week or so of being dragged down. So interesting, notable environment here. Earnings look great, but again, the market's been in love with a lot of these stocks for some time, so we may need to let a little bit of the air out here.
Okay, Tim, we had a pullback. It's almost like it never even happened. And so I wonder what that means for this week, because we did see markets or stocks move a little bit lower on the Treasury news we got in the past hour or so. But right now, in general, it really is the calm before the storm between the Fed decision, the jobs report, and nearly 175 S&P 500 companies reporting results, even as investors do continue to chew on AI growth as a secular theme here.
Yeah, that's exactly right, Morgan. And I think what investors are going to be focused on, obviously, Apple, Amazon are big news this week, but also the Fed. I think you're going to see a very different Jay Powell than we have seen over the last couple of sessions. Last couple of sessions, he's been very dovish, really reaffirming the market's belief that you're going to see rate cuts. And look at the consequences. We've had financial conditions that have loosened. The market has shot up, and we're seeing this reacceleration in inflation. So I think you're going to see a lot of that being walked back. Powell's going to come out very hawkish. It might be a negative for stocks in the short run, but ultimately it's really what this market needs longer term.
Tim, I guess we got maybe a preview of that when Powell was in Canada, but how do you think the market's really going to react to that? How much of that already came after those Canada remarks?
Well, I think the market still doesn't believe that this inflation battle is one that we're going to be fighting for some time. If you look at the term premium on the 10-year Treasury, we're still negative. So it tells me that we think that this is going to be in the bag. We're going to get over this. And, John, I think what's so important to look at is historically that narrative is very inconsistent with anything that we have seen. And secondarily, I think it's also very inconsistent with the strength that we are seeing from this economy, and particularly the labor market. Wage growth is still running just under 5%. That is very strong. That is not consistent with a 2% inflation environment. So we need to see some adjustments here. And I think, at the end of the day, you're going to see yields pick up a little bit from where they're at right now.
And Emily, how much can the earnings this week reset the narrative that we've had thus far? I'm particularly curious about tech because we get Supermicro tomorrow. That stock really tanked on not pre-announcing and has recovered somewhat since then. But, of course, we got Apple and Amazon, too. But how much of those are just really their own stories now that on the Amazon side, we've already gotten the cloud results from Google and Microsoft that were pretty strong?
Yeah, earnings are important, but again, this is kind of the Super Bowl, for macroeconomic data this week as well. And we look to things like the jobs report on Friday and the Fed, and I agree with Tim that you're going to see a much more hawkish Fed. Powell does not want to be a hawk. He knows that aggressive Fed tightening has historically resulted in exogenous shocks. I don't think he wants the Fed to be the scapegoat if we do see a contraction in economic activity, but I don't think he has much of a choice here. He's kind of got to go to the dark side of this and become a hawk here. And I think that could challenge this Fed pivot momentum-driven rally that's particularly benefited higher quality momentum stocks, tech in particular here, and it could result in a potential rotation into more cyclical parts of the market. The other market implication I would think about is yields. I mean, you're looking at an environment now in which the aggregate bond index is yielding over 5%, about 5.3%. That is close to 20-year highs right now. So we think that makes a lot of sense to look at any incremental backup in bond yields that we're seeing and think about that as a really attractive long-term investment.